Hello, Mavericks. How's it going? We are starting up here into relative strength. We're going to be taking a look at our velocity score, and we're going to be looking up at a possible input to use, which is ATR. All right, so let's jump into what ATR is and why we're going to use it. When we're scoring our velocity scores, we talked about using exponential moving averages are a great way. Now again, velocity, we're trying to measure what's ready now, like what's ripe right now. We want to find the currencies that are just the ripest at the moment for a trade. EMAs are a great way, and we talked about indicators, we talked about parabolic SAR, we talked about relative strength. Well, ATR is going to be another one of those indicators that we are going to be looking to use to build a velocity score. So quickly, let's go through average true range. We are going to be introducing ATR again to you in the Chart Master series. It's a great way to use ATR for stops, but we'll get into that later. Average true range is basically measuring how much it moves each period. So it basically takes the highest point and the lowest point and says, okay, that was the range of today. So let's say a currency traded between $1 and $1.01. That ATR would be 1 for that period. And then let's say the next day, the currency trades from $1.01 down to 99 cents. That was a 2-cent move. And so what happens is it takes the last 14 days. Again, that is the default. The default is set to 14. You can use any number you want. We'll talk about that in a second. But it basically is saying, okay, we took the last 14 candles on this chart, and this is the average movement from high and low that it made during that period. That's exactly what it's telling you. It's telling you exactly that this is how much it moved over the last 14 candles. Now, of course, the default is 14. Anytime we are using an indicator, we have to put in numbers. We have to put in these numbers to say how many candles do we want to measure. We've talked about this in like moving averages, like a 13 period EMA. We're saying we only want you to measure the last 13 candles. We don't care about the 14th. We don't care about it. We just want the last 13. Anytime you make the numbers smaller, you get more timeliness. You get an earlier signal, but you lose accuracy. The larger you make the numbers, you know how it works. You get lots of great accuracy, but the signals are very late. The move has already happened. So we like you to start with 14. If you want to play around with it, I know I've played around with the 50 period ATR, and it really it smooths it out to where it's a lot slower, but it is late. So I eventually bailed on that and said, I'm going to go back to the 14. So let's talk about what ATR is telling us, because it's telling us a bunch of great things about the symbol. The problem is it doesn't tell us anything about direction. It doesn't care about direction. There's nothing in ATR that tells you anything about direction. So it's going to tell you, okay, what's the average move per period? So here we have in an area where, okay, the currency's at $1.21, and if you go directly below that, you see that the ATR is 92. So what this is saying is for the last 14 candles, the average daily move has been 92 pips from high to low. That's its average true range. And then up here, when it's at $1.30, ATR was all the way up to 145 pips. Now the average movement over the past 14 periods was a lot larger. You could see than it was just a month ago. Why? Because volatility had gone higher. Volatility gone higher and the movement had became larger. And so it's basically telling you what's the average movement during the last 14 periods. Now, it's also going to tell us percentage. And this is where I love to talk about this, because ATR is the simplest way to measure volatility. I remember as a new trader, when I got into currency trading, I thought to myself, okay, I know trading. I've been trading for a decade. I'm going to get into currency trading. And I'm thinking, look, trading's trading. whatever, it's the same thing. But I just spent a decade in trading equities and equity options, and I knew the stocks that were volatile, and I knew the stocks that weren't volatile. Like, it's just something you knew and you learned throughout your experience as a trader. I got into currencies and they all were just symbols to me. I literally didn't know their personalities yet. I didn't know which ones moved the most. And something like pound yen is almost always the most volatile pair. It's not all the time, but over a long period of time, that's always been one of the more volatile pairs that you could possibly trade, pound yen. Why is that? I can't really tell you why, but it's always been one of the more volatile ones. And then you take a look at something like Euro Swiss franc. Euro Swiss franc is not a volatile currency pair. And so, as I said, it would be like me getting into the stock market, not knowing anything, and trading something like Tesla and being surprised when it moved 10% in a day. That's what I'm talking about. When I got into currencies, I was like that. I had no concept. And so using ATR, you can basically come in and measure how much it moves on a percentage basis. And that's going to tell you which one is more volatile than the other. So let's just take an example here. And all we did is you divide the ATR by the current price. And that's going to tell you, hey, this thing moves, during this period, it moved 0.75% each day, because it's a daily chart. Up here, it became much more volatile. It's now moving 1.1% per day. So it's a great way to really measure where the volatility is. And a lot of times when I am looking to enter trade, and if there's high volatility, and I know there's going to be some crazy movement, I will purposely pick a less volatile currency pair. Why? Because I don't want to get knocked out with just crazy price action on my stop. I want to get into something that's going to move a little slower, be a little bit less volatile, to where I can catch the move I'm looking for. And ATR is a great way to do this. So if you take a look at these two, what do I trade over this next period, CAD Swiss franc or Aussie dollar? You can see that the CAD Swiss franc is a third less volatile than Aussie dollar. That will be a less volatile trade to take. There's times where you say, hey, I want the most volatile. What is the most volatile currency pair right now that I can trade? You could find that out using ATR as well. And then the last one, trend strength. Now, this is how we are going to use this on our velocity score. Trend strength. ATR is simply telling you how big the candles are. Now remember, if a candle's big, it means it had a large supply and demand imbalance. So if we just take a look at the trend of the ATR here, you can see here that this is a moderate trend. And you can see we had a moderate trend down. We bottomed out here. And then we sort of had a moderate trend up. Then all of a sudden the ATR flattened out. And you can see there was not a whole lot of movement in this currency. You know, it basically moved from 122 to 125. And that's all it moved for an entire month and a half. And then you can see the ATR steepened quite a bit. And this was a strong trend. And look at that move, 122 all the way up to 130. I mean, that's just a monster move. And then look what happened to volatility. Falling volatility is telling you, hey, there's small candles there. There's not a lot of opportunity for good, great trades. This is just small candles, falling volatility. It's not the optimal time to enter a trade. Then you can see the trade turns back around, gets some momentum again, and makes a nice run from 129 up to 134. This is how we're going to use ATR for our velocity score. And let me just read this. The average true range is a unique indicator. It gives you no signal on direction. It simply tells you the strength and intensity of the direction it's going. And actually, it doesn't even tell you that, because if you had really big up candles followed by really big down candles by really big up candles, where the price didn't move anywhere for 14 days, but there was huge volatility, that would show up in right now there is a lot of volatility. So the quickest way to determine how volatile a currency is with ATR. And we're really going to use that trend as a way to identify which currencies are getting more intense. Remember, when we say the word intense, we're really talking about which currencies have the largest supply and demand imbalances at the moment. And that's really what we're looking for. We are going to be talking about ATR as stop placement. This is a great use of ATR. We're going to talk about this in the Chart Master series. It's perfect because one of the biggest mistakes people make is they make their trades with stops that are too tight. And how do you explain to someone what is too tight? Well, what does that even mean? How do you quantify that? ATR is a way to quantify it. For example, if your trade has an ATR of let's say 100 pips is what it typically moves in a day. And you get in and you say, I'm going to put in a 20 pip stop. I will make a big bet that you are not in that trade for more than a day. I'll actually I could actually go down to like a 1 hour chart. And if the 1 hour chart was 20 pips, I would tell you, you're likely going to be out of this trade in 1 hour. Why? Because that's the average range it moves during that period. And so we use ATR to basically be far enough away to just not get triggered by regular price action. But in this session, we're talking about ATR velocity. So let's talk about what is going to make a score. Whenever we make an addition to an input, we have to quantify what determines a +1 and what determines a 0. What gets a point? What gets a score? So let's take a look at just a few things. Trend. Now, trend, we go back to the definition of trend: higher highs and higher lows. Is the ATR making higher highs and higher lows? If it is a strengthening trend. If it is falling and making lower lows, lower highs, it's telling you that volatility is shrinking. It's becoming less movement. There's less energy to it. So just the movement of the ATR higher is telling you there's an explosion of energy. And then when it sinks down, it's telling you, oh, that energy is going away and it's sleepy at the moment. We're also going to be looking at historical range. It's a really good indicator when you see that every single time an ATR got up to a certain amount in a currency, it paused and it took a break. These points can be measured and say, hey, every time it gets to this point is the end of its strong trend. That's a great little signal for you for an exit, or at least hey, you know what? I don't want to get in it now. It looks like every time it's got up to this level of ATR, it's gone sideways for the next 3 days. So we're going to take a look at the historical range. Then we're going to talk about low readings. This is going to be something that, again, I use, and I really like this one. A low reading of an ATR. Let's think about what that means. It means volatility is compressed. It means the candles are tiny. Now, why are candles tiny? Because there's a supply and demand balance, and it's really tight. So that right there is telling you it's not a good trade at the moment. But we're going to look at some charts, and you'll see that when volatility gets so compressed, a lot of times that is just simply building energy for a massive move. So we are going to take a look at low readings here. So let's first of all take a look at just ATR trend. And it's pretty simple here. Identify the places where there's higher highs and higher lows. So here's a spot right here. And you can see there was a big move. There was a big move down, and then there was a big move back up. ATR doesn't tell you which way it's going. It just tells you during this period of time, there was an explosion of energy. And then it started to go into a downtrend. So during this period of time, you can see the volatility was getting compressed. So take a look at when ATR was falling. Take a look at the price action you got here on Bitcoin. It traded between 46 and 47,000. That's not a huge range for Bitcoin. And then all of a sudden, we start to get new highs here on ATR. What happened? We got a major move to the downside, 47,000 all the way down to 43,000 on Bitcoin. And then volatility fell. Volatility, ATR went into a downtrend. And it wasn't until we started to make some higher highs here that we got this explosion of energy. Again, another big move, 43,000 down to 39,000. Volatility falls. As you can see, it basically goes nowhere during that period of time. Then when we get rising ATR again, you can see we're starting to get some movement during this period of time. We're going to go jump into some just random charts. We're going to look at some charts together, but this is how we're going to use ATR to give us a score. Is there an uptrending ATR? If the answer is yes, that's a +1. If the answer is no, then it's falling. It's like, hey, it's probably taking a break. And again, just look at the times when ATR was falling. It was not a good trading environment. It just wasn't a good trading environment. The times where ATR was rising, it was a much better trading environment. This is exactly what we have been trying to accomplish with a velocity score. How do you trade the currencies when they're moving, and how do you avoid them when they're not moving? This is just a great tool to determine that. All right, now let's talk about the range. Every currency is going to have a different personality. It's going to have a different volatility level. But you'll see that over a long period of time, you can go out and see what the lowest levels of ATR have been. And that kind of gives you a floor for, okay, that's the lowest it's been. And you also can see what's the most volatile, like what period of time were there the largest candles. And what you can do is you can actually find these ranges. And these ranges are going to tell you a lot. So let's take a look at this first range. Every time that Bitcoin gets up to an ATR of about 770, 780, volatility peaks and then volatility falls. Just take a look at the trading after these 4 signals. Well, you can't see the one on the left, so let's just do 3. The trading after this, right here, it's no good. This is no good trading once it gets up to this level. Again, here, we got this massive peak. We've got 2 weeks here of just not good trading. This is just bad activity. It's just sideways. Even this little peak here, you could say, hey, you know what? We went sideways for a long time here. As you can see, by identifying these peaks, we can tell when volatility is likely spent. It's out of gas. It's run a mile and it's tired. It needs to take a break. So that's what the top of these ranges mean. And then just at the bottom of the ranges, we'll talk about this is where the volatility has fallen and become compressed. It's become boring. And this can really lead to some nice moves, because when people have, again, when there's no supply and demand imbalance and people kind of leave, when the momentum finally picks up, it can be dramatic. So let's talk about these low readings. It's basically just preparing us for big moves. There's a big move coming. Now, this is one of my personal favorite chart patterns. It's called the high base. You run up, you have a massive run. So Bitcoin here ran from 41,000 all the way up to 45,000. It's a really nice run. And then look what happened. Volatility fell and fell and fell and fell. But Bitcoin didn't fall. It simply stayed in this base pattern. These are one of our favorites to buy, the breakout of a high base. And you can see this volatility got so compressed. It was down to the lowest volatility Bitcoin had. And again, we'll go back and look at this, for years. This is about as low as volatility gets on Bitcoin. And it led to a really explosive move when it finally had its breakout. And you'll see when you get down to these low volatility levels, you get bigger moves typically. And this is just a massive move to the downside here off that one. And then again, another extremely low reading. So over here, it's like, okay, it's a terrible trading environment. No one should be looking at all to getting into Bitcoin at this point. But the volatility is so low, it's telling me there's likely a big move about to happen. You can see we took a dip and then we took off to the upside. And it doesn't tell us anything about direction, but it just tells us, okay, a big move is potentially coming. So what I want to do now is I want to just jump into some charts, and let's just take a look at some charts together. right, so I'm going to go ahead and add ATR. You can see it's going to be defaulted to 14. And for this exercise, I'm going to bring up this ATR here. Now I'm going to use the bar replay feature. The bar replay feature, if you click it here, you bring up this play. If you haven't used this before, we've got some videos on how to use this. So here we are on a 4-hour chart. I'm going to click the bar replay, and I'm just going to go back in history, and click at a point. Okay, so this is where we're going to start our bar replay. So let's take a look at ATR. We just had a big move from a compressed, look how long this was compressed in volatility. We had a very, very long period, and we just had a big move here. And volatility is currently falling. So what we've been told is, hey, recently volatility has been better. There have been more movement here on Euro US dollar. But right here, right now, the volatility is falling. Let's see what happens when this ATR finally does bottom out, and where it bottoms out, and when it starts to actually make an uptrend. So as you can see at this point, we're now starting to see some rising ATR, and we're starting to see some better price action. Remember, this doesn't tell us anything about direction. This could be a long or a short. It's not telling us anything, but what it's telling us is it's starting to get more exciting. This is in a downtrend. So for me, I'm looking to sell short, but I'm looking to sell short off of bases, and there's one right there. There's a base. So it's telling me volatility is rising. Get ready for it. As you can see here, we had a nice base and a breakdown off this. And let's see if volatility keeps rising here. You can see it's really starting to speed up. All right, let's go through a couple more exercises and a couple more pairs. And I want you to see kind of what I'm looking at, and then I want you to go in and do this same thing yourself and really see if volatility or if ATR can help you out. So here I am on pound yen. Go back in time and click a button. All right, there's our bar replay. So right now, volatility is compressed. If I go back in history, I can start to see when it gets down to this area, this is really low volatility for pound yen, potentially telling me there's a big move coming. And right now, we are in an uptrend. There's no question we're in an uptrend here. I am very interested in potentially looking to buy a breakout here of this 154. It's telling me, hey, you could be on the start of a really big move. All right, so we did get that breakout. We got that breakout of that base, and we're starting to see a little bit more volatility. Let's see if that volatility keeps helping us out. You can see volatility rose quite a bit. So that was a nice setup here, a buy here, and you can see this thing's been really almost straight up from that point. Let's start to take a look at our top levels of volatility. As you can see, we have a top level back here. It topped out here. As you can see, we still have a lot of room before we are exhausted, before it's had such a large move that it's exhausted. Now look, this currency can do whatever it wants. I have no idea what's going to happen when I click the play button. It could keep going up. It could keep going down. We are going to exit based on our position management, not on what the ATR says. But the ATR was very helpful on getting us in to this move really at 154.50. And this thing's up 250 pips at this point. And again, for me, trend change has already happened. I would definitely look to be out. But let's see what happens here. The volatility is picking up. It's a better trading time than when volatility is low. Let's see if we can find a time when volatility gets low again. Just gonna let it run until it gets down into that 30, 35 area. I don't know if it's going to cooperate here. All right, let's go to another one. Sometimes they cooperate, sometimes they don't. All right, let's finish up with Kiwi dollar here. Again, bar replay, and go back in history, make a random click somewhere. That's going to be my starting point. Take a look at ranges here. As you can see, this has been a high level for ATR. We got a big spike here, but for the most part, every time we get up to this 30 area, volatility tends to back off, and it's backing off right here, right now. When it gets down into the 20 area, now we're getting compressed volatility and likely signal that there could be a big move ahead. So let's play this. All right, we're getting down into lower levels of volatility. We're not quite low enough yet, but to me, this is like, okay, Rob, this thing's getting squeezed. This thing is just winding up a coil, and at some point, there's going to be a release. I don't know which way it's going to be. I don't know if it's up or down, and right now, the trend is telling me I don't know either. Look at these moving averages, they're flip-flopping. So let's see, okay, we finally get now a breakout to the upside. So this low volatility was kind of signaling like, hey, get ready, something good is coming. We don't know what it was, and now we see that it was a breakout to the upside. It was a nice breakout to the upside. So for me, I'm like, okay, I like this. The ATR was compressed for a while. If we break above this line, maybe that's an entry point. Again, signaling a decent sized move coming. Let's see what happens here. You can see volatility just sunk right back down. So we're back down now into low volatility. More signs. Okay. Too bad I didn't stop 2 candles before, but more signs that we're getting really compressing volatility, that there's a move coming. And you can see, boom, probably off some news, big move down here. So now it's like, okay, we have all this compressed volatility. Now we're getting expanding volatility. Let's look for some possible entry points. Now this trade is now moving. In here, I didn't want to trade it. You shouldn't be trading it. This is garbage trading in here. But now it's saying, okay, it's ready to go. The energy is being released. So now we're just looking for potential setups. There's a rally to sell into. You could sell this breakout of this level. Again, there's a lot of things you could do here, but it's telling you, okay, the velocity is here. The velocity you've been waiting for is here. We peaked out. Remember, we talked about 30? Every time I got up to 30, that was about the maximum of volatility it has. And you can see it backed off of that, and now we've actually bounced back up. All right, so that is just a real quick run through on volatility. I would like all of you to go out and test this out. Test this out and identify those low points. Those low points are really important. The high points, I only use the high points to basically help me say, oh, I don't want to get into it now. It looks like a great setup, but just not right now. I think it's stretched. Let's wrap this up. ATR score. The trend is going to be how you score this, or how you should score it. Those low readings. Again, the low readings are there to tell you, okay, volatility's been compressed for a while. There could potentially be a big move. High ranges are telling you, hey, this thing's probably spent all of its gas. It had a big run, and it's probably out of gas. It probably needs to sit for a while. As I said earlier, I will use the high ranges to not take a trade. If the range is too high, I'll say, you know what? I don't like this trade. I'll go find something else. A low reading is telling me to lick your chops. You may be getting in on an explosive move where there's a lot of energy built up. So ATR is just a fantastic tool to help you with volatility. So hopefully this helps you understand what ATR measures. You can look at the ATR and tell a lot about a position. It's one of the things now whenever I look at trading something new, I look at the ATR and I can see, oh, this is kind of its personality. This is how volatile it is. This is how much it moves. It's a really quick way to just see what it is you're trading. It's very useful in determining the strength of the current trend. Rising ATR tells you it's getting stronger. Falling ATR tells you it's getting weaker. And you can absolutely use ATR as one of your inputs for your volatility score. Go in, backtest this, see if you like it. Maybe you like it better than RSI. Swap it out. It's no problem. We just want to get good inputs to give us a good score. Thanks for joining me. Bye, everyone.